If you are a beginner in stock market, then you are in the right place. It's very important to know the stock market basics before we even think of investing. Hello and welcome to my channel. Please click the like and subscribe button for more updates. There are many people who made exceptional profits from stock investing. It is indeed exciting and smart way of making passive income. However, before getting into that, having knowledge of stock market basics is crucial. Here are a few stock market basics for beginners which we will be covering today. What is a stock market? In order to answer this, we need to understand what stocks are. Let's say you started a business with one of your friends. So the ownership of this business is divided into two parts called stocks. A stock is a part of the business and the person who owns the stock is called a shareholder as he becomes a part owner of the company. It's the same with Google, Apple or Facebook, except they have millions of shareholders. The stock market, as the name suggests, is a market where buyers and sellers meet in order to trade stocks. But this isn't any normal market, as the stock market is monitored by a regulator. The markets are open Monday to Friday for 7 hours each day. Luckily, in this century, all shares are traded online. There are a ton of websites and apps these days where you can buy or sell a stock. A stock exchange is more specific. It's a place where trading is executed, such as New York Stock Exchange. The exchange also keeps record of the supply and demand of the stocks, which eventually determines the price of that stock. A stock exchange deals with stocks and securities listed on various indexes. You must have heard about the popular stock market indexes such as the S&P 500, Dow Jones and Nasdaq. These are a few popular indexes which are indicators of either the entire market or a sector of market. How can you make money by investing in stocks? Well, there are many ways to earn money such as dividend investing, futures and options trading, etc. But for beginners, we'll stick to only two main ways. One way is to buy the stock at reduced price and sell it when the price of the stock increases. This way, you can earn a profit by selling at the right time at a price greater than the cost price. Another way is to hold the stocks for a long time and earn money from the quarterly dividend payments. By now, you must be wondering about how much money you can start with. Many people assume that they require huge piles of cash in order to invest in the stock market. But this is not true. You can start with small amounts of money like as little as $100. Many smaller investors multiply their money by depositing on a regular basis. Also, another important piece of advice is hold your investments at least for 5 years. This spreads the losses occurred during any market crash and eventually balances your portfolio. In order to buy a stock, you have to set up an online brokerage account with one of the investment platforms. You must have heard of Robinhood, which is mainly used by new investors. You may also explore Fidelity Investments and Vanguard. They are among the top investment platforms. Yes, if you are co-owner of a company, you bear the profits and losses equally. So if this business goes bankrupt, you will have to bear the losses and vice versa. Definitely, it's risky. However, with high risk, one can earn high profits only if you follow risk mitigation strategies and make sure the risk is diversified. For instance, sometimes a company might make 10% or 20% profit in a year. This differs every year as there is no fixed criteria to determine how much profit will the company make and how much return would you get on your investments. There are many stocks which for many years don't make any profits but might get huge returns in a year or two. Hence, investing in different stocks like a minimum of 8 to 10 different companies balances the losses occurred by some stocks with that of the profits earned by others. Basically, diversifying your portfolio lets you reduce losses and saves your money. So you might earn around 18 to 20% return on average if you diversify and invest in good companies over a time period of 5 years. Let's see the next important question. Why should you invest in stock market? So if you want to invest and multiply your money, there are other investment opportunities which are expensive and require thousands of dollars or maybe even hundreds of thousands of dollars. On the other hand, stock market lets you start investing with as little as $100 and makes you a part owner of big brands like Apple or Microsoft. Plus, opening an account online is effortless and super quick. Another reason is all information about a company is just at your fingertips. You can type Apple stock price on Yahoo Finance and get all historical data, charts, and financial statements which give you important ratios like debt ratios, profit margins, etc. Also, you may type Apple Investor Relations on Google and find conference calls and earnings reports. This will give you insights about companies' future plans, business model, or the results of last quarter.